Welcome to month 2 of the dual momentum system. We're going to look at the performance in month 1 and the selections for month 2. So the aim is to build a momentum portfolio by finding the best performing sectors, factors, themes, countries, asset classes. We benchmark against the S&P 500, but then we also look for lower correlation to the S&P 500, so not that bothered if there's a US recession, and then we're diarising the trades to help improve our learnings. So disclaimer, this is a study of momentum trading strategies and trend investing, but no specific advice is implied. Watch the methodology video to get a better understanding of the system. So the hypothesis for momentum trading is that if you've got a strong relative strength, then hopefully it's a leader of the future and you've got a decent trend there. So first up is countries, and the best performer was Turkey, with the worst performer unfortunately being our selection, which was India. For India, I still feel that there's some good medium-term potential there. Turkey is still very volatile, so there are some risks there. And interestingly, Mexico is now at a 52-week high. So for month 2, we will stick with India. For Turkey, the reason why it's doing so well is that it has a very high inflation rate, about 80%, but interest rates are only about 10%. So Turkish nationals aren't buying bonds and they aren't putting money in bank accounts. They're putting money into Turkish equities. The outlook for Turkish equities is reasonable because they started off on a low P ratio for the market as a whole, below like 5, and Turkey is doing some business with Russia, particularly Turkish banks, and so they're seeing strong earnings growth because they're one of the few countries that will deal with Russia. So next up is factor. Last month we didn't choose anything in this area because I felt that they were all quite heavily correlated with the S&P 500, but then I did remember that there's this PQVG from Invesco, which is a multi-factor ETF, and it's had pretty strong, pretty consistent performance. So for month 2, I'm adding in that ETF. And if we look at the ETF in more detail, what has to happen is that every 3 months, each holding has to pass filters for quality, value, and momentum. So low debts, decent profits, good PE ratio, increasing price. These are the top 10 exposures, and it's a phenomenal group of companies. Terry Smith, eat your heart out. I'd much rather have this as a top 10 than Fundsmith. So if we look at the dividend growth record of some of these, you've got the years there that they've consistently increased or held their dividends, which is pretty awesome. Procter & Gamble topping that at 66 years. Just amazing. United Health, they have a medium-term EPS growth rate of 13% to 16%, and they're on track to achieve that for 2023. So healthcare, it's a defensive sector, but it's also a growth sector. So that one's in the portfolio. So next up, we've got the S&P 500 sectors. We went for healthcare, which had pretty good performance. It's at an all-time high. Energy did incredibly well. That surprised me given the good growth run that it's had. Again, it's quite volatile, so that one, I mean, it's under watch, but we're going to stick with healthcare for the next month. For themes, we chose global energy last month, which was absolutely awful performer. Learnt the lesson there. We did bend the rules a bit to get that one in. So that's going to be replaced by biotechnology, and biotechnology is fairly uncorrelated with economic events because these companies can hopefully invent new drugs, and it's much more looking into the future in a bit more of a longer term basis. So there's potential there for biotechnology to continue to grow despite what's going on in the news. For asset classes, the highest relative strength is still commodities, and that's what we chose last month. We're going to stick with it, but yeah, performance was slightly negative. Hopefully going forwards that one will still do okay. So a quick comment on trading systems. I find they're generally either expensive to buy or you have to pay quite a lot of money for a training course. They can be confusing or give you way too many entry signals so that in practice they just don't work as well as you think they might. So if they did work that well, they'd be way more popular. There'd be far more people following these trading systems. Now look at trend versus momentum. So momentum is just what's gone up the most over a given time frame, such as 6 months, but trend is the reliability of a price increase generally over a much longer time frame. The issue can be if you've got trend with low momentum, does it meet your requirements for an acceptable return on investment? And then too high momentum is just not sustainable in the long run. So I'm hoping that things like healthcare and the multi-factor ETF will get the balance right between having enough momentum and not too much, so that they're good things to have in our portfolio. So there's a momentum Google sheet, and I've given you some screenshots from that earlier in this video. That's available to purchase on eBay. I'll put a link in the description. Please like the video, subscribe, and drop a comment. Where do you see momentum and trend?